Today, it's the best buying opportunity I've ever seen in my career, 40 years in New York. Do not sell today. The buying opportunity is really, I think, unparalleled. 5 or 6 years from today, people will look back and say, oh, I was so foolish. I should have bought everything in sight in New York City in 2024 and 2025. Why didn't I do that?
Hello, everybody, and welcome to another episode of Multifamily Hangout. This is a very special episode. We're doing it on Tuesday for our special guest. And I'm Adrian Danila, your host. I want to thank our sponsors, Kairos and Coastal Painting Contractors, for making this show possible. With this being said, I want to turn it over to my co-host, Chris Moreno. Take it away, sir.
Awesome. I'm extremely excited today. Adrian, we just got a little taste as we were preparing. We always have a little one-to-one with our guests. They're preparing, as usually in the green room. We're talking about what we're about to go on live, just making sure they feel comfortable. And Bob was actually riding in his car through the Long Island Expressway, through the tunnel. So he's literally about to be going into his lounge to be able to take this live. So I'm going to give a little bio. We're going to jump in, and he's going to be in just a couple minutes. He is a wealth of information. He's a great mentor to multiple people, but he's been a broker in New York City since 1984, which is incredible. He's just in his 40th year of brokering real estate. He's sold over 2,329 buildings with a market cap of about $22 billion. Which is astounding. And what's great is he hasn't just sold commercial office buildings, but he's actually done a considerable amount of multifamily. I think he estimated that his multifamily sales were around 40% of his business, give or take. In the 80s and 90s, for about 25, 26 years, he owned and ran Massey Knakal Realty Services, which sold more than about 3 times the number of properties, the second leading firm in New York City. So he was by far the number one firm 3 times for a couple decades. And he ran the firm with a very, as he talks about it, the servant leadership management style. So really focusing on empowering people on his team, training, giving them self-esteem, and then really just knowing each market really, really intensely. He sold his firm to Cushman and Wakefield in 2014 for $100 million.
Welcome to the show, Bob.
Hello, everybody. So sorry I'm late. Sorry again, guys. Thank you for accommodating me. So sorry. Being a New Yorker, I should have known that traffic on the Long Island Expressway is very unpredictable. So I apologize to everybody for being late.
All good, Bob. We just, your ears must have been ringing. We were singing your accolades and your praises, just about your history, the work that you've done, the leadership and mentorship, but then also how you're putting out so much content.
I'm completely transparent. I'll talk about anything and love talking about real estate and real estate related stuff. So I'm happy to answer any questions that you or any of the viewers have.
Well, so I'm going to dive ahead of that because something that stood out to me, of course, real estate, we can go into brokerage, we can go into assets, we can go into mentorship. For me, it was the intentional focus that you have. Adrian, that stood out for both Adrian, myself, someone else I was on a call with earlier today. I told him, he showed me your baseball card. He showed me how that signature from you, and in the downstairs of the building I'm in here in South Downtown, they have a signed, hand-delivered signature of your baseball card. And that intentional basis, that humility, that, and to me, hilarity, that you're able to do that, you have fun with it. So that, you are so memorable, Bob. And I think we both appreciate, and the people who you meet with, that you look them in the eyes, you share that story. Someone who sold $20 billion plus in real estate and knows New York maybe better than anyone else, every street corner, still takes the time to pay it forward, to help others, to give away content. Why do you do this? Why do you could just go off into the Hamptons, you could go off to Mexico. Why are you still spending time with us and helping us to learn more about it?
Okay, well, Chris, if I was going to go off anywhere, I would go to Grand Cayman, which is my favorite place in the world outside of New York. Absolutely love it down there. But why do I do it? You know what? I feel so blessed for so many reasons. Number one, I found a career that I love so much. I still love it as much today as when I started almost 40 years ago, July 16th, coming up on my 40th anniversary. So I'll be starting year number 41. And I found something that is not only a career, but it's also my hobby. Number two, and I got into it completely by accident. So lucky that it happened. So many people helped me along the way. I think if you look back on, of those 40 years, 26 years and 46 days of those were spent owning and running Massey Knakal Realty Services with Paul Massey. It was a great story, kind of rags to riches, running the company on credit cards for 3 years at the beginning and growing it to 250 people. And we sold it for $100 million. And, everybody looks at that and says, oh, what a great story. But I will tell you that the thing I am the proudest of out of the whole Massey Knakal experience is that today in New York City investment sales, there are 30 companies or divisions of companies that are owned by or run by people that learn the real estate business at Massey Knakal. And being able to do that, being able to lead the company with a true servant leadership mentality where we wanted to embolden our people, strengthen our people, train our people, build their confidence, build their self-esteem, encourage them and let them know they could do better than they even thought they could do. And we wanted them to do better than we did. And so, I look at those folks today and that it feels so great that we were able to help them create great lives for themselves and their families, help turn them into great real estate professionals. And I love to see them succeed, as long as they're not competing with me. If they're competing with me, I want to knock them out. But I love to see them be successful, do great things. And part of that whole approach was because of all the help that people gave us along the way. You can't do it on your own. You need help from people. So many people were so helpful to me along the way to share their time, their experience. So to give back is something that feels really good. I love what we did to help the folks at Massey Knakal who excel so much. And I still love helping people. When I speak to somebody on the phone, answer their question, send them a baseball card, do whatever, and they say, hey, Bob, it's really, I'm so inspired by what you do. If I could help somebody even just a little bit to do better, to feel hopeful, to have confidence, and to achieve great things in their life, that's a great thing. And when you look at what this business affords people, it is the purest form of meritocracy there is in the business world, I think. And it's such a great business to the extent that you have that abundance mentality. There are two types of mentalities you can have in the world. One is that everything is a zero-sum game and a win for you is a loss for me. So I never want you to win. Or, hey, you know what? You won, good for you. I'm going to go get my win and there's plenty to go around for everybody. So let's all do well. And I think that people who have the mentality of the latter typically are happier people, have a happier life. And, it's great to see good people excel. So that's a big part of what drives me to do what I do.
Bob, you had such an outstanding career, so much success, massive success. I do want to go into a different area. I'm not sure if you've been asked before on a podcast. Tell us about the adolescent Bob, young Bob. You're a teenager. You're looking up to the future. You're hopeful. I'm hoping, right? What was life like for you as an adolescent, as a teenager? What were what were your plans out there for life in general? What did you want to do? And then how did you end up in real estate?
Adrian, that's a great question. I will tell you that the young Bob Knakal was very much an athlete. I did go to the Wharton School at Penn, which is a great school, and I'm very proud to have gone there, but probably wouldn't have gotten in just on my grades. Baseball helped me. So I played baseball as a kid. I played basketball through high school. I played baseball through college, but always playing sports. I loved team sports. I loved the competition. I loved the teamwork and the collegial nature of working with other folks. And I think that's one of the things that actually at Massey Knakal we looked for as one of the traits in people's backgrounds is, were you in team sports? Real estate is a very competitive business. It's also very team oriented. You have to work well with other people. So we looked at that as one of the many traits that we looked for in people to increase the probability of success. But the young Bob Knakal was always on the field, on the playground, on the basketball court, playing sports. And as a kid, my mom had to like drag me out of bed every morning to get me to go to school. But on snow days, I was the kid who was up at 7 o'clock out with my shovel, making $5 and $10 to shovel people's driveways and sidewalks. And, I'd be a 10-year-old kid making $300 in a day. And I thought that was the greatest thing in the world. So I always wanted to make money, always wanted to excel. So that was the way I grew up. I grew up in a small town, Maywood, New Jersey, which is in Bergen County, New Jersey, between Hackensack and Paramus. But most people probably never heard of Maywood. It's a very small town, but great childhood.
That's so cool to hear. I love the sports connection as well. If you had to go back, I think Chris Powers, obviously, and Moses Kagan and some of the work they're now doing, reinvesting in others, building massive businesses, but also now investing. And Moses is focusing on. Kind of curious, like, what advice do you give to people early in their career or people thinking about getting into real estate? Do you tell them, yes, get in, or be careful, follow your passion?
I absolutely tell people to get in. I think this is the greatest business in the world. I also tell young people, you say you want to get into commercial real estate. Well, that narrows it down to about 100 different types of jobs. There are so many different things you could do. Do you want to invest? Do you want to develop? Do you want to be an analyst? Do you want to raise equity? What do you want to do? You want to be a broker? Well, there's 10 different types of commercial brokers there are. So I tell young people, particularly in your college years, you're looking for internship or you're just out of school, expose yourself to as many aspects of the business as possible and find out what you really, really love. What gets you excited? What, you want to wake up every day. You think about the job somebody has where they're constantly looking at the clock and can't wait till it's 5 o'clock. And then you look at somebody who the alarm goes off, you jump out of bed, you get your workout in, you get to the office, and then it's 7 at night and you're like, oh my gosh, where did the day go? I wish it was 9 o'clock in the morning so I get more stuff done, right? That's the way you want to live. So I tell people, find something you're really, really passionate about. If it's business-wise, if you pick a career because you think you'll make a lot of money doing it, very likely that you're going to burn out at some point. If you pick a career because you really love it, if you love it, you'll be able to work hard enough at it to succeed. And if you get to the top of any aspect, any business within the business world, you're going to make a lot of money. So I think it's finding what you have passion for. And I always tell people that the traits that I see in real estate brokers that make it to the top, there's 3 main traits that almost all of them have. Number one, they're an expert in a particular niche of the business. And people know, hey, if I want to do a transaction like that, I have to go to this person because they know that better than anybody. They're a real expert at it. 2, they have that passion for the business. And the passion's so important because if you think about it, no matter how good you are, the market always has been, is, and always will be cyclical. So through no fault of your own, you're going to go through tough times, either because the market's down or just by luck, you're going to have 4 or 5 deals crater at one time. So you have to have that love of it so that you can get through those tough times and stick around for those times that will inevitably get better, and they will inevitably get better. So you have to be around for that. And then the third trait is the folks who use discipline really well. And you'll notice I say use discipline as opposed to have discipline. Discipline is a tool. Everyone has the ability to use it. Some people use it better than others. But, the real estate brokerage business is oftentimes not very glamorous. You have to do a lot of fundamental things, blocking and tackling, we call it. And you have to do them over and over and over and over again. And you have to have the discipline to do that. And so I love the quote by Abe Lincoln, who said, discipline is choosing between what you want now and what you want most. And if you can keep your vision on that main objective, that big goal that you have, and understand that that's what you want most, then you'll have the discipline to do those often mundane things over and over and over again until they start to work for you.
Bob, I want to go to trends. What trends are you seeing in a New York City real estate market this year, 2024? And how should investors navigate these trends?
Right. Well, Adrian, that is a very, very complicated question. I think we only have an hour. I could go on for 6 hours about that. But generally, what I will tell you is that I think for the market generally, I think we are at or very near the bottom, or maybe even coming out of it. But to be more specific, you have to disaggregate the market into different product types, because the one thing that's very unique about this correction, as opposed to the last big four corrections. Last big four corrections being the S&L crisis, early 90s, recession of the early 2000s, where we also had 9/11 and the dot-com bubble bursting, and then shortly after the Russian credit crisis, and then the GFC, 08, 09, the recession or the correction in real estate, basically from 2016 through early 21, and then the one that started in the second half of 22, which is I consider a fifth one. The difference about this one from the first four is that during the first four, every product type was losing value, just going down by different degrees. Today in New York City, it really is very product specific. The industrial market in New York is very strong, and it's a very, very thin slice of the market because of zoning and things like that. So it doesn't really move the needle, but that's a strong sector. The hotel market is extraordinarily strong today. You know, hotels got killed during COVID, but today, out of the 120,000 hotel rooms in New York, 30,000 are not hotel rooms anymore. 14,000 have been converted to student housing and other uses. 16,000 are occupied by migrants. And the city has cut back on Airbnb availability. So the hotel market is awesome. ADRs are way up, occupancies are way up. Tough to get a hotel room in New York today. So we're starting to see a lot more folks looking at building new hotels, et cetera. So that market's strong. The retail market in New York is strong, but retail started to get negatively impacted 3-4 years before the rest of the market started to get impacted. And so generally, retail rents have stopped falling, leasing activities picking up, investor demand has been back for 4 or 5 months, retail is strong. Then we get to the two biggest categories in the city, which the multifamily world changed in New York very profoundly in June of 2019 when our rent laws changed. The rent laws have always been very anti-owner, but they really went far against owners' interest in June of 2019. And then COVID, et cetera. And now we've had some new legislation that has gone against owners. So that is a sector in which values have been very challenged. Just about every refi is a cash-in refi, and there's going to be significant turnover in that space. And the political headwinds are probably going to go further against owners before they start to turn around. With regard to the office sector, generally people say, oh, office in New York is not good. That's not true. New construction Class A office is doing relatively well. It seems like if you build a new office building anywhere in the city, you're going to get triple-digit rents and have a lot of demand from tenants. It's the B and C office that's really getting crushed. And I think what you're seeing, buildings that had sold for $700 or $800 a foot several years ago are now trading for $300 a foot and even down to $200 a foot, and some below $200 a foot. So that's creating all kinds of fundamental problems in that sector. What is creating what economists will refer to as a negative feedback loop is that the folks who paid $700 or $800 for their building that have $400 a foot in debt on it are now competing for tenants with people who have a cost basis of $200 a foot. There's no way they can compete effectively for tenants. So I think we're going to see significant turnover in that B and C office category. And so what we have right now is a situation where up until about 6 to 9 months ago, I'd always said that the S&L crisis in the early 90s was the best buying opportunity I've ever seen. Today, it's the best buying opportunity I've ever seen in my career, 40 years in New York. Values are, you have buildings selling at a price per square foot that they sold at 20, 25 years ago. And people will say to me, hey, Knakal, you're telling everybody it's the best buying opportunity because you're a broker, you want to see stuff trade. But at the same time, I'm telling every single seller not to sell today. Unless you have to sell, unless you have a very compelling strategic reason to sell, do not sell today. The buying opportunity is really, I think, unparalleled. And I think that 5 or 6 years from today, people will look back and say, oh, I was so foolish. I should have bought everything in sight in New York City in 2024 and 2025. Why didn't I do that? And, to buy property takes two things, takes capital and courage. Unlike the S&L crisis where nobody had capital and nobody had courage today, a lot of people have capital, but they don't have the courage. And I think those people that have the courage that are out there buying today are going to make generational buys of a lifetime.
As you're mentioning this, such incredible drops, by the way. You're just dropping knowledge. And for those who don't follow you, need to follow on LinkedIn or Twitter or your favorite social because you put out great content every day. I've gotten to sit down for coffee chats with people you probably know, Bob, who have shared me the cycles they've been through, right? Going through the Lehman crisis, and people who have sold, you might even know, Gelt out of California, Keith Wasserman, who talks about never wanting to sell property again. He's like, should have never sold that property, just like you're saying. Technology. So technology, obviously a very vague word, but I think you having the map room. So maybe if you could talk a little bit about the map room and how maybe did you use technology or not? And number two, if you could share a little bit about what you're building now, because I'm not sure everyone knows what you're building with AI and how you're using technology today. So I'd kind of love to hear your thoughts on technology and real estate.
Yeah, Chris, that's funny to hear me talking about technology because I'm probably the least technologically savvy person that exists. I'm happy my cell phone goes on in the morning. I had the flip phone long after nobody had a flip phone. I was reluctant to give up the BlackBerry because I love the buttons. I'm a big fan of Benjamin Hardy and Dan Sullivan's series of books. One of them is Who Not How. And the main thesis of that book is when you ask yourself, hey, that's a good idea. How am I going to do that? You're asking the wrong question. The question should be, who am I going to get to do that for me? So realizing that technology was changing so dramatically, and to illustrate how it's changing, I'll take you back to me sitting at my desk as a 22-year-old in 1984 when I started. I had no cell phone, no computer on my desk, no fax machine. And we carried rolls of quarters around. So we go to the phone booth down in the corner and call people that didn't show up for building tours. If you look at how dramatically the world has changed over the past 40 years, I think the extent to which things are going to change over the next 5 years is going to blow the past 40 away. AI is extraordinarily powerful. And so realizing that that's the case, and my broker coach, Rod Santomassimo, is probably the leading authority on AI and real estate in the country. I got on the horse. I hired a guy to be my COO, Seth Samowitz, who is an AI expert. He started AI companies. He worked in driverless cars. And I figured, hey, if this guy can make a car drive by itself, he can figure out how to help me sell buildings. So we're using AI in three main ways. One, we're having it help with making prospecting much more efficient and effective. Two, we're using it for transaction execution in a really big way. And thirdly, on the data interpretation front. And the data interpretation is something that I think has by far and away the biggest potential, but is going to be the most difficult for the real estate industry to implement. And the reason for that is that unfortunately most data sets in the industry are not very long and they're not very accurate. And the reason for that is that a lot of the data in the industry comes from third-party aggregators. Principals in the industry don't have any incentive to give third-party aggregators inside information on their transactions. The interesting thing about statistics and numbers is that the numbers themselves really are not all that meaningful. It's the relationship between the numbers that matter. So for instance, if I tell you that in Manhattan in 2019, there was 26.3 billion in sales volume, you have no idea what to think about that number. If I tell you that at the peak of the market in 2015, Manhattan sales volume was 57.4 billion, and that in 2020, during COVID at the bottom of the market, the trough of the market, it was 11.1 billion. All of a sudden, the 26.3 starts to have some feel to it. So in order for the relationship between these numbers and the fluctuations in value to have meaning, the methodology for calculating the data has to be the same. Every research person I've ever spoken to has their own idea about how things should be calculated. Like, for instance, calculating a cap rate. Okay. Well, are you using trailing 12? Are you using forward 12? Are you making projections for vacancies? What are you using for projections? What's your stabilized vacancy factor? All of these things matter. And how do you bucket different types of buildings? A 5-story building with retail on the ground and 20 apartments above. Is that an apartment building? Is it a mixed use building? If you say, hey, it's a mixed use building because there's retail on the ground and residential above, well, the Empire State Building has retail on the ground floor and offices above. Is that a mixed use building or is that an office building? So if you don't have consistent methodology, the relationship between the numbers just falls apart. And fortunately, we have data sets that go back 40 years that have used the same identical methodology. So we've been working with data scientists for about a year now to take a look at our data sets and try to come up with things that are predictive, to look at how value has fluctuated and try to come up with a metric or a basket of metrics that will be predictive of when we might see a change in the market, which would really be unbelievable. If that works, it'll really be great. But I'm so excited because I know the integrity of our data is very, very high. If AI does what we think AI can do and everybody says it can do, it's going to be really interesting to see what comes of that.
I want to stay a little bit with numbers, and I want to talk interest rates. Obviously, just a few years back, the interest rates were about a third of what they are today. And most of the investors that I talk to, are saying it's so hard to make a deal work based on current interest rates. What's your take on the current situation from a interest rates perspective, and what is some light at the end of the tunnel that you see that you might want to share, or maybe that there isn't anytime soon?
Yeah, no, look, I think it's a total reset. The market has been lulled into a false sense of security with rates being too low for too long. If you look at the 10-year over the past 50 years, the average 10-year has been 5.4%. I don't know what it was today. I'm dressed casually. I'm on vacation today, technically. So I didn't check what the 10-year was today. Yesterday, I think it opened at 462. Historically, that's below average. How much are rates going to go down? Are they going to go down 50 bips, 75 bips? We're not going to see a 10-year at 2% again. It's just not going to happen unless there's some cataclysmic global meltdown financially, which nobody's anticipating. So I think that we need to readjust the thought process. The unfortunate thing is that the interest rate policy of the Fed, I think, was based on a misdiagnosis of what the problem in the economy was. I think the Fed was making the assumption that the employment market was overheated when actually it was just undersupplied. And you raise interest rates the way you did, realizing that only about 20% of the U.S. economy is highly correlated to interest rates. So you look, 35% of the U.S. economy is healthcare and education. I don't know any high school kid that said, oh, I'm going to put off college next year. I'm going to wait for interest rates to come down. Or somebody who said, hey, I'm scheduled to have open heart surgery, but let me wait till the 10-year hits 3% before I go in, right? So these parts of the economy are still moving forward. The interest rate policy has disproportionately adversely affected the real estate business. It's really remarkable what's happened, but I'm not expecting interest rates to go down substantially. I think they may come down a little bit. But this is what they should be. We went through a period where rates were just far too low for too long. And if you think about it, the thing that caused the housing bubble to burst in 2006 was because rates were too low for too long. So, low interest rates are great for real estate, but create problems down the line. And I think today we're more in line with where interest rates should be in a normalized world, as opposed to thinking that, they're going to go down 200 basis points. I just don't see that.
Interesting. I think, people have short-term memory loss. It seems like, or long-term memory loss when they think about historical averages. I was talking to someone on a plane, Bob, who said, you think we're at high interest rates now? He goes, my interest rate in my house 35 years ago was 18%. It's like, good God. So you've seen, you see cycles. One of the things I want to ask you about was, we think about history and we think about New York, even where we're at in Atlanta. You have a lot of great history in a lot of these buildings. I think I'm standing in a building that's 100 years old. New York has buildings that are hundreds of years old. And I want to kind of get your take on, think about like the carbon offsets, think about real estate. There's some people online who, like Fifth Wall, Brendan, you might know, who post a lot about sustainability, new technology from a physical world and development. So I want to get your take on the balance. Like, how do you think about the history? Because I love the history of real estate. I love hearing these stories and people built these and the picture of the people on the skyscrapers, right, hanging off the edges. But then we also have in New York City, you've got the ratings on every building. And I see a lot of D's and F's. So how do you think about that from a sustainability and then weighing the historical part of buildings? What are your thoughts on that?
Yeah, well, I absolutely love walking around the city and looking at buildings, the different architecture, the different types of buildings. I think that's so fascinating. What's one of the things that led me to want to be a building sale broker, and absolutely love that. But the city has a rich history of architecture, and almost a look back on how the technology has changed relative to the building of buildings. I think it's a fascinating thing. I love everything about buildings. I think that the city has done a great job of creating historic districts and landmarking some buildings so that they won't get knocked down. I certainly sell a lot of land where a lot of crummy old buildings do get knocked down, and I'm happy to see those go. But you want to have a good balance of new construction and preserving the rich history of the city. So I think you have to find that nice balance between having a city continue to grow and keep up with things that are required today. And I think even if you look at, I said earlier, new construction Class A office is doing well. If you're in a brand newly constructed office building, or you're in an office building from the 70s or 80s, it's like being in a high school gym versus being in Madison Square Garden. It is a completely different experience, and not surprising that tenants, really will pay up, and there's high demand to be in those new unbelievable buildings because it's a completely different experience.
We were just in a building, and to your point, we were on the 55th floor in New York City, and they had trees in that office. They had gorgeous wood. They had, the top golf simulators. I was like, wow, all of these things you have here are things that probably draw people into the office and make people have an extremely memorable experience when they step foot in your office building. So I think about that all the time with that experience.
Yep, absolutely. And you're seeing a lot of buildings where you walk into the lobby of some office buildings in New York now, you feel like you're walking into a chic Soho hotel. They have the Muzak going on, there's dark lighting, and velvet couches and a bar, and a coffee open coffee bar, and it's really folks are thinking of really creative and cool ways to make coming to work fun.
You shared amazing living/working experiences. I want to stay on the impact of remote work. Of course, we all know COVID had a huge, enormous impact on how much people are working even today remotely. How has that impacted the real estate market in New York?
Oh, well, it's impacted it very profoundly. I mean, clearly we were back, I think, right after people started getting back to the office. Everybody said, oh, well, after Labor Day of 2020, people will be back. They didn't come back. Then we said, oh, after Labor Day of 2021, they'll be back. They didn't come back. And slowly but surely, people are getting back to the office. But that has had a ripple effect, because without people coming into the office, it was tough for stores in Midtown to survive, because you had 20% of the people that used to come in to get their sandwich for lunch were coming in for sandwiches. So it had a ripple effect through everything. But I think the one thing that is very clear is that being in the office environment is unlike anything else. I think especially for young people, I think you learn more by just being in the ecosystem of the office and hearing things tangentially as you're sitting in the lunchroom or you're getting a cup of coffee and you overhear things about a deal or something. I think there's so much to be learned just by being in that environment that I think it's great to be in the office. People should be back in the office, particularly young people. I think you'll learn so much more than you learn just by being on a series of Zooms, and also helps with creating company culture. So want to see people get back to the office. I think it's great for the city, great for business generally. It's just a challenge because people realize, in New York, commuting is not so easy. You live 8.5 miles outside of Midtown Manhattan, and it could take you 90 minutes to get to work. There are definitely challenges with that.
Do you foresee this coming back eventually at some point to comparable levels pre-COVID, or you're not seeing that happening in the near future?
Yeah, nobody really paid attention to the card swipes pre-COVID. I mean, you always have people who are out sick, they're on vacation, they're traveling for business. So, I wonder what the statistics really were pre-COVID. And then, where are they today? People will get back to the office. I think more and more companies are encouraging their employees to get back. I know in the city today, Tuesday, Wednesday, Thursday, most people are back in the office. Monday and Friday, particularly Friday, not so much. Your productivity depends on what type of position you have. Commission salespeople, I think, can be just as productive, if not more productive, out of the office. But salaried folks, if you're getting paid the same thing, whether you work or you don't work, I think that's a challenge.
And now a word from Dean Fungawing, founder and CEO, Kairos.
Just know that the days of being able to push things onto renters insurance is going away very, very quickly. And the solution that sits in between the real estate owner and the insurance company is the solutions that we provide. Real-time risk data, what we call building telematics. It lets you know what is happening in real time. That's the water leak detection solution. We can combine that solution with shutoff valves, which is a more capital intensive project and it's not for everybody. You can do it on the beginning of a building's life cycle. So if you're constructing a building, I highly recommend that you start with automated shutoff valves and leak detection solutions, because now you're providing sort of this blanket gold standard of like risk management protection for the entire life cycle of the asset. It's like, imagine just never having catastrophic issues in that building and being able to hand that off at disposition and saying, look, we haven't had historical losses. We haven't had historical insurance claims. You can acquire this asset at a much better value, right, comparative to someone else, because our maintenance record is stellar.
I'll never forget that when we had a startup in San Francisco 15 years ago. We said, we don't want to see the sales team in the office. We want you out in the field. If you can kind of give us some basis of that map room and the idea of networking, why do you get out so much? I think your number is 261 networking events a year. Is that your goal? If you can break that down for us.
Yeah, 261 networking events a year is the goal. There's 261 working days if you exclude holidays, although there are a few new holidays today, so I don't know if that's still valid, but that's the goal. And because I think from my perspective, the investment sales business is a business where it's not who you know, it's who knows you. Best way to become known, you have to have market presence initiatives. You have to make your prospecting calls, send your email blasts, send your text programs, do hard mail. Hard mail is very, very underrated, but I love hard mail. You have to speak in public, go to networking events, be on social media, be out there so that people are aware of you and will think of you. If you think about it, and the reason why market presence is so important is because you have to remain top of mind. If you think about the building sale business in New York City anyway, using Manhattan as a microcosm of the entire city, south of 96th Street, which is the prime part of Manhattan, there are 27,649 buildings. The average turnover of that stock over the past 40 years has been 2.6%. What does that tell you? That tells you that not a lot of buildings trade every year, and also tells you when somebody buys a building in Manhattan, on average, they own it for 40 years before they sell it. So people are not always transacting. And when something happens that does motivate them or precipitate a thought, hey, I have to sell the building, and that could be, death, divorce, taxes, partnership disputes, what have you. The next thing you want them to think about is, hey, I have to call Bob. And so you have to remain top of mind. So that's why I think doing things like being on social media, going out to networking events, meeting people, talking to people, doing all the market presence campaigns are so important. And so the map room has been a great thing because the map room is a room that has a Sanborn map that's 24 feet long and 10 feet wide, basically Manhattan south of 96th on the east side, south of 110 on the west side, that has identified every single site that's under construction, every site that's planned for construction, every potential development site, and every potential assemblage site in the city. So if you're a developer in New York, this like being in a candy store to come to this room and can see everything about every neighborhood and every block in Manhattan. And that was created by me taking the opportunity during the pandemic when the city was a ghost town to walk every single block of the city. I looked at every single building, all 27,649 of them, and color-coded the various ones, the subset of things that we were looking for. But the map room is just another way to interact with clients. I rarely had a client meeting in that room that's been less than an hour. Sometimes they last 2 hours. And amazing the amount of knowledge and information that's shared in those meetings because there's so much there. And so that's a great way to not only convey to people, hey, we know everything that's happening in this sector of the market, but also to deepen relationships by being able to spend so much quality time with folks that you want to build relationships with.
Bob, something that I've heard on a podcast, and obviously I don't have the means to check, but you're right there in the market in New York. The statement was like, there's a lot of foreign money from overseas that is being invested in New York currently. Some investors are actually buying buildings at the time, and they don't necessarily care about like filling them, with tenants immediately. They're just investments. They need to park their money somewhere. What role are the investments playing in New York City real estate this year in 2024? And how do you see that impacting the real estate market in general?
Yeah, that's a great question, Adrian. I think that foreign capital has always been part of the landscape here in New York. The peak of foreign capital clearly was in 2014, 2015, 2016, when particularly the Chinese institutional capital was coming in, and the amount of foreign capital invested in New York City in 14, 15, and 16 was 3x and 4x what it had historically been on average or since that time. And what we're seeing today in the foreign capital space is just as with the domestic capital, most of the folks who are active in buying today are high net worth individuals and families. Institutional capital players are not paid to take risks of being the first mover in the market. They're paid to take risks when everybody else is taking the same risk. And so it's the folks who are not in a fiduciary capacity. They're investing their own capital that take the risks first. That is typically the case. And we're seeing that both with domestic investors and foreign investors. And we're dealing with foreign investors from many countries today that have simply said, we can't believe how low prices are getting in New York. We have to buy a building or two just because we'd feel foolish if we didn't. And absolutely, they're looking at cost basis. They see these buildings that were selling for $700, $800 a foot years ago that are now trading for $200 a foot and saying, how do I not buy that?
It's interesting because a lot of these people, as you said, you're right, they might own the building forever or through generations, partner disputes, or maybe the kids run it. How are you thinking about legacy? Are there any projects or things you're thinking about that are life defining through your career or maybe that you're still wanting to think about, whether it's legacy, philanthropy, or even giving back?
Yeah, the thing I'm obsessively, compulsively focused on is just doing a great job for the clients I have right now that want to sell their buildings. That's always been the case. With regard to philanthropy and that kind of thing, back in the Massey Knakal days, we had the Massey Knakal Charitable Foundation that was very, very active. We always encouraged our folks to get involved in a local charity, not only by just giving money, but by giving your time, which we think is more important and impactful than giving money. And so always encourage that. I'm involved in a number of charities. Most of my philanthropic work deals with helping disadvantaged kids, particularly with their education. Those of us who are in the real estate industry, all very, very lucky that we were born to the parents we were born to. We don't choose who we're born to, what family we grow up in, and some kids, through no fault of their own, are in very, very challenging situations, circumstances. And I think to give them a hand up and give them an opportunity to have a better life is a great thing. And we have a lot of folks who are struggling in the city. So there's lots of ways to help them. And that's where I spend most of my time.
Bob, I want to go to inspiration. And my question is, who is the top one person that influenced your life in a most positive way?
Well, I'd have to say my mom probably, but my mom passed away back in 1983 when I was between junior and senior year in college. So it's a long, long time that mom's been gone. But I think professionally, probably Steve Siegel, who's the chairman of global brokerage at CBRE. Steve's been a great friend for decades. Learned so much from him. Just one of the real great people in our industry. He's been very, very inspirational for me.
A little more about trust. You obviously have a lot of trust with people. How did you learn about building and maintaining trust with friends, with clients, and family? What was a big foundation for that? Because I think that's a key thing for my kids right now is how do you build trust and make sure they're telling the truth?
Yeah, well, I think that comes down to a few things that will sound trite and very basic, but things like mean what you say and say what you mean. To always realize that the backbone of industry and business is honesty and integrity. We always just tell our folks, hey, treat every client like they're your mom or dad. Give them the advice you give your mom or dad if they own the building. If you do that, usually you're not going to make too many mistakes. So things like don't overpromise and underdeliver. If you say you're going to do something, do it. People will talk to who they know and who they like, but they'll do business with people they trust. So you need to be trustworthy. And the only way you become trustworthy is by following through on things that you say, being honest. Over the years, there were several times I've given people advice not to sell their building. That's kind of strange for somebody who makes a living by selling buildings. But in almost every single case, whether it's a year later, 5 years later, or 20 years later, that client has come back to me and said, hey, Bob, I really appreciated that you gave me that advice at the time. You were right, but now I need to sell. Let's go to it. Having the perspective that this business and your career is a marathon, it's not a sprint. Don't take shortcuts. Do the right thing. Always do the right thing, whether everybody will know or nobody will know, because you do the wrong thing, everybody will find out one way or another. So just do the right thing, and generally things will work out pretty well for you.
Bob, I want to flip both sides of a coin. When it comes to building a business, the first side of the coin to me is how do you scale? If you could share some great lessons that you learned from scaling your business up to an amazing company that you eventually sold. And then the second one, the other side of the coin is during the financial crisis in 2008, what was the most critical decision that you have made and how did it impact your business?
Yeah, okay. Two great questions, Adrian. One, how do you scale the business? You have to have a framework or guidelines within which people can operate and understand where they fit in to that overall strategy. So I think it's important that, at Massey Knakal, we had a geographic territory system where we had people working in each neighborhood, and, a building couldn't be in the middle of the street. So it was either on one side of the street or the other. And so you knew whose territory that was in. It created an expectation, an understanding of how the whole system worked, and that enabled us to scale. So we had, at our peak when we sold, we had 250 people. Everybody knew what their responsibilities were, what their objectives were. The only internal competition in the office was to see who was going to be the top salesperson every year. Not people weren't competing for the same piece of business. There were rules and guidelines and structure around how any particular piece of business would be handled. And so that made scaling possible. And with regard to the second question, which was 2008, how did we deal with that? That was a horrible time. We had to let go of about 25% of our folks. That was excruciating for us, but we had to do it. And at that time, we had formed an advisory board, several great folks on the advisory board who were all senior people in real estate and in business. And they said, hey, guys, you got to cut quickly. This is not going to be a pretty thing, but you got to do it fast. So the lesson there is, hire slowly, but fire quickly. That was really probably the toughest thing I ever had to go through was letting all those people go in 08 and 09. We had to do it for survival purposes, but probably one of the reasons why I don't want to get back to a 200-person company. I'm looking at BKREA as something where maybe we'll have 15 or 20 people max. And, with AI today, I think 15 or 20 people can do the work of 100 or 150. You don't want to have a very large company that if there's another downturn, we'll have to let people go.
Now, obviously, all the different things you do, as you said, you would go to the Cayman Islands if you took some more time off. You're always traveling, you're always flying. Like when you flew down to Atlanta, I just imagined you're just nonstop. So how do you do work-life integration? What advice do you have? Maybe what have you learned about your family, your personal time, and how you travel and how you fit that all in? Did you have any guidelines or rules, by the way, about being home at a certain time, or was that kind of like something you had your family to deal with?
Yeah, well, work-life balance is probably the most difficult and challenging thing that we all face, and there's no one answer to it or for it because it's different for everybody. And so when people ask me about that, if I really get into the weeds with them, I say, look, if you want to know what you should be spending time doing and how you should allocate your time, do this exercise. Pick 5 people, your spouse or an immediate family member, a friend, a coworker, somebody from your church or synagogue, somebody from your community, and pretend that you just got hit by a bus. And you're at your funeral, and you're going to write the eulogies of these 5 people in your life that are going to eulogize you. Write those eulogies and then read them, and you just wrote a blueprint for how you want to live your life. And so that is a really, really interesting exercise to do. I've done it twice now and changed a little bit the second time I did it. But that shows you the priorities that you have, where you want to spend time, what you want to do. My life is very simple. Selling buildings for me is a career and my hobby. I'm in the gym working out to stay healthy, spending time with my wife and my 15-year-old daughter, who are the loves of my life and my number one priority. I'm selling buildings or I'm in church, and that's my life. And I really enjoy, allocating my time that way, and very happy.
Well, for an individual so accomplished as you are, you could basically retire comfortably anywhere in the world, live, the rest of your life retired, but you choose not to. What drives you, I had to guess, is not money. It's what you just mentioned, the things that matter most to you. I'm curious, though, for those that are watching, what's your relationship with money? What's money for you?
Well, look, money is very important, no doubt about it. And money is a motivator. But I will tell you the thing that I really love about the brokerage business and why I keep doing it is because I think, today they talk about kids on their cell phones and that the cell phone is so addictive because you get this dopamine rush all the time. And when I was a kid, dopamine wasn't a word. Nobody talked about that. But today they talk about kids on cell phones and dopamine. I think in the same way, brokerage kind of gives you these injections of dopamine also. It's like you get pumped up when you speak to a client and they say, yeah, hey, I'm thinking about selling my building, or I have to sell my building. All right, that's great. And then, you go to a pitch and then you find out you were awarded the assignment. That's a dopamine rush. And then you reach verbal agreement on a deal and agree to send a contract out, you get a rush. And then you sign the contract, you get a rush. And then you close the deal, you get a rush. So you're getting all this positive feedback. And so I think that's addictive. All these opportunities to win multiple times a day. I just absolutely love it. I mentioned spending time with my wife and daughter is my number one priority. They're my number one priority. But if my wife and daughter went out of town on a girls' weekend, I'd spend the whole weekend trying to sell some buildings. That's absolutely what I love doing. And again, I feel very, very fortunate that my career has turned into my hobby as well.
All right. So a New Yorker tried and true. What places are you going to eat your favorite meals in New York City? What neighborhoods, what areas?
Depends what type of cuisine. For French, I love Margarelle, which is on 63rd Street, just off Madison. For Italian, Come Prima on Madison between 72nd and 73rd is fantastic. Best meatballs in the city. I mean, there's just so many great places. That's one of the great things about New York is that just about any kind of cuisine you can get at just about any hour of the day or night. A lot of great choices here.
How about the best pizza? What's your favorite pizza?
That's tough. I love pizza. Well, you know what? I have a couple of friends that own pizza joints, so I'm not going to say, but there's a tremendous, tremendous number of great pizza places in New York.
Bob, for the young people looking at this conversation, just getting ready to enter the real life, right out of high school, right out of college, what are some best pieces of advice that you have to share with them?
Okay. Number one, we talked about work-life balance. If you really want to kick ass in business, you're not going to have any work-life balance for 10 years. It's going to be all work. And it's a sacrifice. And you might think, oh, well, I want to spend time with my friends and I want to spend time, watching the game and going out for beers with the guys. Well, you know what? You got to sacrifice. If you really, really want to succeed in business, you go all in, and it's a 10-year haul before you really get great traction and we'll start to see great results. But I think that's the sacrifice that it takes. Also, just realize that in a lot of business, particularly in real estate brokerage, you get out of it what you put into it. I think that luck is an aspect that certainly has played a big role in my life, but I really believe the harder you work, the luckier you get. So realize a lot of hard work. Again, I think getting back to find the thing that you really love and try to do that, and that will certainly lead to a happy life.
So many different things you talked about. I think one of the biggest ones, obviously, with the NAR lawsuit, more affecting the residential side, but I'm kind of curious to get your thought. You're going to use technology in a big way. What is the future of brokerage? Like, what thoughts do you have on how brokers are thinking about the next decade?
For several years, I said that I'm glad I'm getting towards the end of my career as opposed to towards the beginning of my career, because I think that technology will marginalize the brokerage business to a large extent. I mean, real estate brokerage has two main components to it. One is finding a buyer, and two is negotiating the deal. Technology can significantly disrupt the finding of the buyer part, but because buildings are not widgets, the negotiating part of the business, I think, will stay the same. But I think the brokerage business could devolve into more of a consulting business than a true brokerage business. If everybody knew, hey, go to xyz.com, put your property for sale there, you'll get all the buyers funneled down, and then go to a broker and say, hey, finish this up for me. Here are my top 3 offers. Then you'll be on a consulting fee basis as opposed to a brokerage fee basis. That could marginalize fees, create disruption. But the more and more I'm getting into technology, I think there are so many different ways that people will be able to succeed in the business. I mean, one of the things that now that I'm not at the big brokerage shops anymore, I can say, I think the big brokerage shops have to be scared to death of technology, because particularly in investment sales, technology is reducing the need to be at a big shop. Johnny or Susan could be doing brokerage out of their mom's basement in their underwear or pajamas and have the appearance of a company that has 100,000 people. So the need to be at a big shop, the benefits you get out of being at a big national or global shop, is reduced greatly. So I think that with the horsepower that technology is giving people, I'm not so sure that you're going to have a centralized way that business will be done that really will marginalize brokers the way I've thought about it for the past several years. And if you watch my old podcast, I've said that a lot. I'm starting to doubt that, because I'm seeing how powerful technology is and how a single person sitting in a room can appear to be significantly larger than a big company. So I think the jury's still out on this, and it's one of the things that will unfold over these next 5 years of seeing how technology is going to change the industry.
Bob, we've been incredibly grateful to have you here today. We could have gone for hours. Thank you for being here. I would love to give you the opportunity to share some parting thoughts with us and audience.
Yeah, just my only parting thought would be for folks who are in the business already and are having a tough time, just remember that the business always has been, is, and always will be cyclical. Good times are ahead. They're definitely going to get better. And just remember the Stonecutter's Creed. Stonecutter's Creed is pound the rock, pound the rock. And like I said, you do so many things in the industry. You make your calls, you send your emails out, you do your texts, you send your hard mail, you go to networking events, and sometimes you keep doing all this stuff and you don't feel like you're getting any traction. But remember the stonecutter. Stonecutter comes into the shop in the morning, sits down in front of a giant boulder, takes his mallet, and he whacks the thing 99 times, nothing has happened. 100th blow, the rock splits in half. And to the casual observer, they say, oh, that 100th one must have been different. Must have used a different mallet, or he hit it harder, or must have been at a different angle. Stonecutter knows that's not the case. It's the 99 blows that came before that 100th one that made that 100th one work. So keep the faith. Keep doing the things, the fundamentally sound things that you're doing every day. And you may feel like you're not getting any traction, but you know what? Keep doing them over and over, day after day, week after week, month after month. And before you know it, the rock's going to split in half. There are better times ahead. Keep your chin up, keep your confidence, keep going. And I'm telling you, there are great times ahead, and you'll be happy that you made it through.
Chris, any parting thoughts?
I love the quote from Abraham Lincoln about discipline. That's a great one. You know, treat others the way you want to be treated, and do what you say you're going to do, and say what you're going to do, and do what you say. So I appreciate you, Bob. This has been fantastic going down the rabbit hole. I wish you best of luck in your next chapter. Can't wait to have you come to downtown Atlanta, see what they're doing here. As you said, the cranes they're building here, you got to have you back to Atlanta soon. If you don't have plans, we're going to get it on the calendar. And number two, we're going to come.
I'm going to be in Atlanta for the CREI Summit in September. Can't wait to be there. I don't want to say the dates because I'm not exactly, well, I think it's the September 11th through 13th, but I will be there for the CREI Summit. Love the social media communities that are active and that I'm a part of, and I look forward to seeing everybody down there. So I'll be in your great city in a few months.
All right. And we can't wait to be back in New York. We'll come visit you and have some great pizza. So I'm going to be back within the next couple of weeks. All right.
Absolutely. We'll have to go to two places, and then I'll have you guys decide which is best.
Sounds great. Well, thank you, Bob.
Hey, Bob. Once again, super grateful for having you here today. Amazing conversation. I can't wait for us to go into the editing room and cut like 50 pieces of Bob's wisdom, because I think we could easily get to the 50. I hope to get you down the road. We hope to get you back here. There's just so much more wanted to ask. Of course, we've got to be mindful of time. I also want to thank our sponsors for making this broadcast possible. They are Kairos and Coastal Painting Contractors. Thank you all that join us live today. We hope to see you back here in just a couple of days. On Thursday, we have another Multifamily Hangout live at 3 p.m. Eastern Time. And I hope you all have a great afternoon. Take care.